Hey guys, this is René. Welcome back for another video on this channel. Today I want to talk about the difference between raw spread accounts and standard accounts. This is a question that came up frequently in the comment section of my videos, so I wanted to address it, and I will explain briefly what the actual differences are, and then I also want to give you some practical examples in the MetaTrader 5. I prepared some scripts and expert advisors to show you like the effect it really has on actual trading, because as you know, on this channel we are all about facts and actual practical trading, and it's not only theory. So that's what you can expect, and also in the end I will give you my personal opinion, what I prefer and why. So first of all, here this is IC Trading, one of the brokers that I use and that I also work with. They do have the raw spread and the standard account, but this is actually really common for most brokers to offer these different account models. Usually there are, or sometimes there are even more account models or different names for these same account types. Some brokers call it a pro account and standard account, or some brokers have even different names, but usually the main difference between these accounts is that in some account models you have a commission-based pricing structure, and in other account models or account types you have the spread-based payment structure. So either way, you will of course pay for your trading, so you do have some kind of cost, and this is pretty much normal because this is kind of how the broker makes his money or how the broker gains an edge. So it's really important so that the broker can operate over a long period of time. So this is why there are costs in the first place, and then as we can see here, raw spread or pro accounts, or however you want to call them, they usually come with a commission. Here for IC Trading it means that you pay 3.5 USD per half turn, which means that if you trade one lot, so these numbers are always based on one lot, then you will pay 3.5 USD if you buy a position and 3.5 USD if you sell. So overall, for one trade or for one round turn, you will pay 7 USD in overall commission with the raw spread account. Because of the commission in the raw spread account, the spread can be really narrow and it can be as close as 0 points. In the standard accounts, this is a little bit different. Here you do not have a commission at all, so you can buy and sell without any fixed costs, but you do have the spread, and the spread of course it varies, but it starts at 0.8 pips or 8 points. What this means we will have a look at in the MetaTrader in a second, but first of all, here again on the IC Trading website we can see a comparison of the different account types. I will leave aside the CTrader account here because mainly on this channel I talk about the MetaTrader. So for the raw and standard account, you can see there are barely any differences. The only differences really are here when it comes to the pricing structure. So for the standard account, we do not have the commission, but we do see it in the raw spread, and for the standard account we do have increased spreads. So what does this mean in actual trading? I prepared something for you. So here you can see two MetaTraders, and even though this is this looks like it's an FTMO MetaTrader, it's not because I connected to the IC Trading account. So you can see here in both MetaTraders I'm logged into a demo account with Capital Point Trading, which is the trading server of IC Trading. And what we can also see here is that on the left side I do have the raw spread account in black with a black background, and on the right side I do have the standard account. So this gives us the opportunity to really compare them. And first thing I want to do with you is have a look at the market watch. So here we can clearly see, if we compare the two market watches of the different MetaTrader terminals, we can see on the left side, and I put the same symbols here, so we can clearly see, for example, if we have a look at Euro-US dollar, on the left and on the right side, we can see on the left side the spread for Euro-US dollar is always or usually 8 points smaller than the spread in the standard account, and these are exactly the 8 points or the 0.8 pips that are stated here on the website. I mean, it can vary from time to time, and I think if there are important news events, this will also change. but in general the spread is always at least 0.8 pips bigger in the standard account, and this also works for USD Japanese yen. So if we compare these numbers, it's the same. And also, for example, for metals like gold, here the spread increase is even bigger in the standard account. And yeah, that's for Forex and commodities. If we have a look at index CFDs here for IC trading and IC markets, I was not able to spot any difference so far, so I assume that it's the same, and it kind of makes sense because for indices in the raw spread account, we also do not have a commission. Let me show it to you one more time. If we have a look at the specifications in both of these accounts, and we can easily compare this, we can see it's almost exactly the same, so it doesn't make a difference when it comes to the swap. The rest is always pretty much the same or exactly the same, but we do see a difference when we have a look at the commission, because the commission is only listed in the raw spread account and not in the standard account. So that's basically the only difference I was able to spot so far. So what does this actually mean if we're talking about numbers now? So what I prepared here, and let me switch to the experts tab, I want to show you something. And for example, if we go to EUR/USD in both MetaTraders, and I will now activate this show costs script here and click on OK. And here I also want to use the show costs script. So we can see on the left side, this is our raw spread account. So you can see here we will pay a commission of 7 USD for one lot round turn if we trade EUR/USD. The tick value is 1 and the spread cost is 0, because at this point when I activated the script, the spread was indeed 0. So the overall cost for buying and selling one lot of EUR/USD is 7 USD. Then on the right side in the standard account, we do not have any commission, which means that the trading costs are smaller, right? This is not exactly the case, because here you can see the spread is a lot higher. It is 8 points or 0.8 pips, which means with a tick value of 1, the spread costs are 8 USD, which means the overall costs are actually a little bit higher in the standard account. And this is a really important difference, because even though the spread costs are not visible in the first place, they are there. Because if we, for example, have a look at a different chart like EUR/USD, and here we can see I also displayed the ask line in the chart, so you can see here there's this difference between bid and ask, and it's a little bit unfortunate because also on the right side in the standard account we do see the same lines for bid and ask, because I think IC Trading uses the same liquidity provider or data feed for the prices. But if we compare the actual price levels in the chart, wait, let's maybe switch to gold because it's easier to see here because the spread is bigger. So what I want to do here is, and what I also did before, and it shows this pretty nicely, if I make a screenshot just to pause everything here, you can see that in the market watch here, the bid and ask price for gold, these prices are different than the prices that we see here in the chart. Wait, let me get the actual screenshot on the screen here. So we can see that, wait, how can I navigate here? Let's make this a little bit bigger so we can see the actual numbers. So here, now that I made the screenshot a little bit bigger, we can see that in the navigator, the prices are 3,316.76 for the bid price, but in the actual chart, the bid price is a little bit higher. Then for the ask price in the navigator is 3,316.92, and also here in the chart it's a little bit smaller. So in the chart, this is a great comparison actually, because in the chart, as I said, we have the same data feed, same prices that we see in the raw spread account, which means that in the raw spread account the bid price is higher, the ask price is lower, which is better because we always have to buy at the ask price, and we always only can sell at the bid price. That's where the spread is coming from. The spread is the difference between bid and ask. So which means that if the spread is getting bigger, or if the ask price is getting bigger, the bid price getting smaller, it means that our trading conditions overall are worse. And yeah, I mean, many people say that the spread costs are not actual costs because the price can still change, and then we do not have any commission, we do not pay anything. But this is just not right, because this here clearly shows that if you would buy and sell at the same time, then you would pay the spread, and it's bigger in the standard account than it is in the raw spread account. And we will do this in a second, but first let's have a look at some other symbols here, because we can also make the same thing here for gold. So let me activate the show costs here and here. And here we can clearly see on the left side, we do pay the commission again. Of course, we do have a spread, which is not zero here. So we also have to multiply it with the tick value. So the spread costs here in the raw spread account are also there. So we have overall costs of 15 USD if we want to trade one lot of gold. And in the standard account, we do pay 18 USD. So here again, the standard account is a little bit more expensive. Then let's also do it for USD Japanese yen, because here we should see something very interesting. So if I activate a show costs script in both charts here, we can now see on the left side, no spread, overall cost 7 USD coming from the commission, of course. And on the right side, we do see that we do have a spread, no commission. And here actually the spread costs are smaller because the tick value is smaller, which means that 1 point, or 1 tick in this case, is worth less. And this means that the overall costs here for one lot are actually smaller. But this can be a little bit misleading, because to have the same fluctuation in your account or the same impact on your account, you would have to trade a little bit more than one lot to actually have the same impact, because the tick value here is smaller. This comes down in the end to currency exchange rates, because we always need to apply these cross rates. It depends on your account currency, the currency you trade, and all of the different currencies. So this is where it gets a little bit tricky, but just know that to have the same impact or leverage in your account trading USD Japanese yen compared to, for example, euro US dollar, you would have to trade more than one lot, and this would mean that the overall costs in the standard account are at least similar, if not higher, than in the raw spread account, which is, in my opinion, really interesting. So let's now have a look at what this actually means if we trade. So I created another program here, which is the time open close program. So let's run this in euro US dollar maybe. So if I run time open close in both charts, and now we will wait until the next minute comes, and then the script will open and close one position in both charts. So it should happen anytime now. So with the beginning of the next 1 minute candle, we will see a trade in euro US dollar in the raw spread account on the left side and in the standard account on the right side. The trade is opened and closed immediately. So we can see now in the history here these two trades actually. So you can see the time was just now basically. And let me remove this so we don't see endless trades here every minute. And we can now compare these values. So you can see on the left side in the raw spread account, we did not lose anything on the trade, because this is pretty obvious. There's no spread, so we can buy and sell at the exact same price. This is why I wanted to explain before the difference between bid and ask and what the spread actually means. So we did not lose anything on this trade on the left side, but we paid 7 USD in commission. On the right side, we did not pay any commission. Wait, let me show the commission here. We did not pay any commission, but the profit on the right side is -8. And this is only coming from the spread, because if we buy and sell at the exact same price, and this is important, we always can only buy at the ask price. We always can only sell at the bid price. Always. There's no way around this. As I said, this is the little edge that the broker has to guarantee that he makes profits in the long run. So there's no way around this. You will have trading costs either way, with a raw spread account and with a standard account. So let's maybe do the same experiment with gold. So let me activate time open close here and time open close here on both sides. So with the next minute or the opening of the next minutes, we see 2 trades in 1 trade in each of these MetaTrader terminals. There it is. So we can see, and let me remove this again. We can see on the left side, we can see that we pay 7 USD in commission. We do lose 9 USD on the trade, which means basically that we do have a spread in the raw spread account also for gold. And then on the right side in the standard account, we do not have a commission, but we do see a profit of minus 19, which means that again, the standard account was a little bit more expensive. Just to make this complete, let's do it also in USD Japanese yen. And then last thing is I want to show you some more practical examples of an actual trading strategy and show you the difference it can make when you actually trade. Then I will also give you my summary or my conclusion why I prefer one of these account types. But yeah, first of all, let's have a look at USD Japanese yen here. So on the left side again is the raw spread account. On the right side, we do see the standard account. So on the left side, we did not have a spread. We paid 7 USD in commission. On the right side, we did not have a commission, but we do have a spread and we paid 5.38. So you might assume that the costs in the standard account are lower here for USD Japanese yen, but I tried to explain this before. This is mainly because of the smaller or lower tick value, which means that basically if you would want to have the same wait, does it actually make sense what I'm saying? Because if we would trade more lots, then we would also have more commission in the raw spread account. So yeah, I think if I'm not completely wrong here, I think the standard account is actually cheaper for USD Japanese yen. And this shows us that, I mean, sometimes the raw spread account is cheaper, sometimes the standard account is cheaper. There is a small difference, it's not too big. So let me give you now one more practical example. So I want to do a visualized backtest with my range breakout expert advisor just to show you on one day what the difference also can be. So let's just test for the current year. I don't even need to have a look at the settings. I just want to show you the actual effect that the spread has on your trading. So we can see here, and if I now also go to properties and show the ask line, we will see the ask line here. And yeah, the colors are not perfect, but yeah. So once the range here is finished, we can see, okay, yeah, never mind. We do see the first trade already. So you can see there was a sell trade executed at the bid price, of course. Now, the only thing that can happen is that or 2 things can happen. We can either hit the stop loss, which is up here, or we close the position at the end of the day at a specific time. This is how my range breakout strategy works. So let's talk about these 2 cases. So let's talk about what happens if we close the position at the end of the day at a specific time. Since we are currently in a sell position, we will always close at the ask price at this specific time, which means that at this moment, so to say, we do pay the spread, because the spread is the difference between bid and ask. So the difference between the bid price that we bought at and the ask price that we sell at. Actually, the bid price that we sold at and the ask price that we kind of flatten out the position or then buy back. And this means that we pay the spread. The second thing that can happen is that we hit the stop loss. And here is the bigger or more crucial difference, because if we go really close to the stop loss, okay, it does not happen on this specific day, but here let's just assume at this point we would still hold the position. At this moment when we came back to the upper level where the stop loss was. It means that if you do have a bigger spread and the ask price is just at a higher level in the standard account, it means that your stop loss is touched earlier than in the raw spread account because the ask price is higher. And this can have an actual impact on your trades because then the trade is closed out, which means that if you just barely touch the stop loss because the ask price is higher in the standard account and the price then reverses and falls down again, which might lead to a profit at the end of the day. I know this is very theoretical, but if this would have happened, then you would have lost the trade in the standard account and you would still have it open in the raw spread account. So long story short, this is actually for for me the biggest reason why I personally prefer the raw spread account, because to me it just feels more natural to have the actual low spread, because this is the one parameter that really can impact your trades, because especially when trading with stop orders that are pending orders waiting in the market for the execution, then the bid and ask price is relevant for the execution of these orders, which means that if the bid and ask price is more narrow or closer to each other, it means that like the middle price, so to say, needs to go or run closer to the actual stop level or stop line to trigger it. And yeah, this is for me personally the biggest reason why I prefer raw spread accounts, because in my trading strategies I work a lot, especially in the range breakout EA, I work a lot with stop orders, and here it feels more natural to have a more narrow or smaller spread. As we've seen before, like when it comes to the actual trading costs, it might not always make the biggest difference, even though I still think that overall, at least for the symbols and strategies I use, I'm better off with the raw spread account compared to the standard account. So yeah, but that's basically it. I know a lot of people were wondering what the difference is, so I hope I was able to explain this a little bit, and especially also I hope I was able to explain the difference between bid and ask and the spread, and what the spread actually means when it comes to trading costs and also when it comes to trade executions. So that's it. Let me know in the comments if you like this little insight, and if you do have any open questions left, also put them down there in the comments so I can read them and answer them. That's it. Yeah, leave a like if you haven't, and please subscribe to the channel if you don't want to miss out any updates on automated trading in general and interesting topics like this. So I will see you in the next video. Until then, have a great time, good trades, bye bye.